talk about the 203K streamline, unlocking sales for realtors and selling tired, distressed, and foreclosed properties. Today's challenges are there's a large number of bank-owned properties that have condition issues that banks want to sell as is, as we know, and there's a large number of distressed properties where the seller is unable to make repairs due to lack of funds. Inventory of property that is in need of updating as well. And the financial challenges, the financing challenges, is that the lenders don't want to do loans for properties that have habitability and safety issues, lack of construction financing available to first-time home buyers as well, credit score challenges and lack of down payment funds for first-time home buyers make the majority of first-time home buyers FHA candidates. And what is the streamline, the 203K streamline? It's an FHA minor rehabilitation mortgage. This is what's happening in my 40s now. I can't see. This is great. That allows non-structural repairs and improvements to be made to an existing property and financed into the loan. The repair program permits home buyers to do up to approximately $30,000 in repairs to a property and provides the funds for the repairs. This can be expanded up to approximately $38,000 when combined with an energy-efficient mortgage. And the qualifications for a borrower for a 203K streamline: it has to be owner-occupied, has to be their primary residence, 1 to 4 family properties, 3.5% down payment. The minimum FICO is 620. Subject property that requires $5,000 minimum in repairs, appraised value as improved that supports the loan amount and improvements. Eligible properties are single family and planned unit developments, 2 to 4 unit properties, condominium units and FHA approved projects, and REO properties. Ineligible are log homes, manufactured homes, homes that have never been completed, homes that have been completed, completely demolished, including the foundation. When to use the 203K streamline, I'm not going to go through this whole list, but it's anything that's not structural, exterior, interior painting, lead abatement, improvements for persons with disabilities, and that's also on the flyers as well. Getting started. Identify a buyer looking for a deal. There's so many out there right now. And the loan is actually a really simple loan when it comes down to it. You just need a contractor's quote, and it's basically the sales price plus the quotes and a 10% contingency as a buffer. Identify the property that needs the work that would be a good deal for the buyer with certain improvements. Contact 203K expert like myself, and good to identify licensed contractors to do work. Examine your own listings that would sell if they had some TLC. The difference between a 203K standard versus the streamline is with the 203K standard, there's one general contractor that oversees all the work. A consultant is required. You need a consultation done, and that can run about $500. And then you've got inspections, and then you've got an appraisal, so it gets a little more costly. Larger, more complex projects, structural additions, 5,000 minimum. You need a detailed work write-up, and there's about 4 to 5 draw requests. The streamline is much more simple. You have about 2 to 3 contractors, simple single contract jobs, repair, replace, upgrade only. No consultant is required, and $5K minimum, $30,000 maximum, 2 checks per contractor. And why the streamline versus the full? It's simple. Fewer parties involved in process. Less expensive to the borrower, fast closings. If ducks are in a row, these can close up to 30 days. What we require a licensed contractor to do all the work. Contracts between buyer and contractor with scope of work and itemized repairs and improvements. The property must appraise as is completed value at or above the sales price plus repair improvements. What we require also is that the work must start within 30 days of closing, and it must be completed within 6 months. There's a 10% reserve contingency and a 15% reserve contingency if all systems are not functioning. So if the electricity and the water's on, all is functioning, there's only a 10% reserve. Basics of renovation. At closing, residential mortgage services creates a renovation escrow account. 50% of the renovation funds are dispersed for the start of the work at closing, and the remaining 50% are dispersed after, when it's completed. Included with the initial disbursement is an instruction letter that explains how the final disbursement works and provides contact information. The advantages to a buyer is that they're buying a house and they're getting what they really want. There's less buyer's remorse. In many circumstances, there's instant equity, and I've seen this a lot. And they have the cash to make the improvements. They're pretty much doing, they're getting the house that they want for the most part, and they're getting a deal. Repairs don't have to be made to the property prior to the sale. Property moves quicker to do a larger pool of buyers. Closings are typically faster due to lack of appraisal issues and repairs. Advantage to realtors, tough listings become more marketable due to renovation features. You sell more properties faster. You can work with buyers that aren't looking for perfect house, but that they can make near perfect, and you will make sales you are walking by now. And who we are, Residential Mortgage Services. We are a full-service direct correspondent lender based in Portland, Maine, and we currently have 15 branches in New England with 2 in Connecticut, Glastonbury and Plainfield. We closed $750 million in retail loan production in 2009. Our entire focus as a lender is on purchase money and serving purchase money relationships. We are common sense mortgage bankers that have been in business since 1991. And what does the K really stand for? That's it. Any questions about the 203K? Yes?
Why would somebody want to do a 203K regular instead of the streamline? Why are the two?
Well, because if they need more than $30,000 worth of work on the house,
And what will the regular one go up to?
no maximum. So if there's structural repairs that they need done, that's the full 203K. If it's just painting and minor stuff under $30,000, then streamline is the better way to go. Yes.
There's an old and brown pool. How do they look at that?
That is actually they can't. That won't be included. They don't. Chris.
If it's an existing pool, if it's an existing pool that's structurally sound, they can make repairs, but they cannot add any amenities types of items onto it.
Like a new liner or anything?
There is potential to do that if there's an existing pool.
Okay. And another question, if the buyers, they know a general contractor